Now, I want to call into question something I get a lot. Someone asked me a question. Actually, I've been asked this twice now. Can you generate 1% a week on covered calls? My answer to them is, yeah, of course you can. With SPY, no, you can't. Well, let me qualify that. You can, but your risk parameter goes significantly higher. Okay. So what do I mean by that? So what they're doing is there's a lot of influencers out there that will show a strategy in which they say that they generate 1% a week. That equates to 4% a year or 48 or 4% a month or 48% per year. Is it possible? Absolutely, it's possible. Nothing's impossible when it comes to investing and trading. However, when you're looking at these things, the first thing you should ask yourself is, what's the risk? Okay. Now, with a covered call strategy, the way I do it, there's no risk. But here's the caveat. When someone asks me, can I generate 1%? Now I generate about 1 to 1.5% per month. Every month? No. My average is about 1%. When I take my total income for the year and divide it back over 12 months on the cover call strategy, that's been about my average. It's anywhere from 10 to 12% a year, which equates to about 1% a month, right? But is it always 1% a month? No. Consistent monthly income means that I consistently generate income. Now, I want to show you something. And for those listening, you'll just have to hear me out here. For those watching, you'll get to see this. Let me show you my spreadsheet for my cover calls. Okay. So you can see, let me get to it here. This is my income for covered calls. Now, mind you, these are weekly covered calls. Ah, I forgot to put my newest one in here, so I'll show you that. So the first week I generated $1,300. The next week, 700. Now don't mind this because I'm doing something, but in essence, 700 the next week. And then the week after that, 1,500. Okay, so you see how it fluctuates. Now, if we look down at the bottom, my total credit I've received minus my fees is $2,617. That's about a 0.5%. Now, this is as of my trades up to the 20th of January. So there's more in here. But this is going to equal about 1% when we're done. I got to put it in here. So, but I want to point out something, and I didn't put it on my spreadsheet. So let me go over to my trading platform here and show you what I'm talking about. So let's go. And for those listening, I apologize, but um, let me go to it. So let's look at my current covered call here. I have a 696 covered call. If you notice, the trade price is at 47 cents. So remember, if looking at my spreadsheet, my average is about $3, $3 to $4. You can see that here. Every once in a while it drops, and this is when the market is dropping. And this latest one, as you can see, is 47 cents. Why so low? Well, because the market was no longer at my purchase price. Okay. I purchased my shares at 695 and change, right? You can see it here, 695.37. So I sell the 696 covered call. Well, if the market's depressed, which it was, you're not going to get the same premium. But I'm getting consistent monthly income. What was my consistent monthly income for this week? It was 180 bucks. That's basically what it was. Almost $200. So that's consistent. It's just not consistently $1,500. Okay. Just make that clear.